Dre Parker here, and I want to share with you a little bit about what I do, who I am, and the 5 different types of life insurance. For those who don't know me, I'm a financial professional, a holistic business coach, a Psyche facilitator that deals with energy psychology, and I'm also an Accelerate at Life or PQ or Positive Intelligence coach. My team and I, we specialize in finances, business, and life coaching. And here's a little bit of my information. So let me just share with you what I do when it comes to finances. I specialize in 3 areas, and the first area is risk management. So risk management is all about protecting your greatest asset. Now you may be asking, what's your greatest asset? It's your ability to earn income, your ability to earn a living. There is no investment on the planet that will ever make more than you when it comes to your income. So we have to make sure that you are protected. Protection against you not being here, or you being here, but you can't run your business or work your job because of medical issues, or protection against needing someone to actually take care of you. The second thing is a little bit more sexier than the first thing. It is all about wealth accumulation. I help you grow your assets, and it's always about where you are today versus where you want to be tomorrow. What does financial independence or retirement look like for you, and when is that going to happen? So the 2 things I take care of and take into account is 1, making sure that you never outlive your money, and number 2, making sure that we take care of the biggest threats to your money, which is Uncle Sam, taxes, and of course, debt and inflation. And the third thing I do is called leverage. I teach people how to generate more wealth and income by using other people's money. I show people how to treat their bank accounts like the banks treat our accounts through a process called reverse banking method. So let's go over the 5 different types of life insurance. Which one is best for you? Now, here are some questions I want you to ask yourself when it comes to life insurance. Number 1, are you a believer in life insurance? There's some people out there who just don't believe in having life insurance, and that's totally fine. But my question is, are you one of those people? Another question I want you to ask yourself is, have you ever seen a situation when something happened and a person had life insurance, or a situation when something happened and a person didn't have it? Think back, even if it's somebody you don't know, or maybe it's a situation that you heard about. I want you to think back about those 2 scenarios. And the third thing is, do you own life insurance outside of the job? And if not, why? A lot of people think that that's good enough, but you don't own that. So when you leave your job or your job leaves you, you're not going to have life insurance. And the 4th question is, if you were to die or have an extended long-term illness today, would your family be better off or worse off financially? And that's a question I want you to really think about. So if you have some time, if you have 5 to 10 minutes, I would like to show you some cost-effective solutions that you may want to consider. The first insurance I want to share with you, well, let's call this the Camry. And in our industry, we call this term insurance. So let's take a look and see what this is. Let's say you're 35 years old. This insurance will cover you for 30 years. So it'll cover you from ages 35 to 65 years old. Let's say you need $500,000 of insurance. So what you need to do is make this payment every month, because it's only $50, which is really cost effective. You make this payment every month, or you make it annually. As long as you're making the payment, you'll have it. So how do you access this insurance? The traditional way is through a death benefit, which is paid to your family tax-free. Now, I want you to think about this. Who do you have in mind to receive this death benefit? Because that's very important. This is the reason why you're actually getting the insurance. Now, the other way you can access it is through living benefits. In case you have cancer, heart attack, or stroke, or you can't take care of yourself and you need some type of long-term care needs in your lifetime, or at least through this 30-year term. I want to make sure that this takes care of you. We work through top A-rated companies that offer these benefits. Now, you can agree this is pretty inexpensive. It's actually less than a cup of Starbucks coffee a day. The negative of this is after 30 years and 1 day, you don't have any insurance. Now, for this period, the good thing is it will protect you and take care of you. It will take care of the mortgage. It will put your kids through college. It allows you to actually invest a lot of money, so maybe you can be self-insured by the time you're 65. Let's take a look at the second type of insurance. The second type of insurance is what we call the Lexus. Now, it's still a Toyota engine underneath the hood, but this is a term with a return of premium. It has a little bit more bells and whistles, and it's a better ride. You're still covered from 35 to 65. You still have $500,000 of a living benefit and a death benefit. Still monthly payments, but the cost is more. This is about $100 a month, but you have a few more choices. Let's go over these choices that you have. You have 3 choices. Choice number 1, when you hit 65 of age, if you want, you can get all of your money back that you paid into this guaranteed, which is a total of about $36,000. Now, imagine if you were just to put this money into a savings account for 30 years. You may have $36,010 by the end of the 30 years. However, with this, if something happens along the way, you have a $500,000 death benefit and living benefit. Like I said, this is what we call a return of premium. Let's take a look at option 2. Maybe you don't want to take the money back. So option 2, instead of a full refund in exchange of money back, maybe you want to keep a fraction of the $500,000 death benefit and get a $125,000 death benefit until 120 years of age. That's option 2. Option 3, you might say, hey, maybe I want the $500,000 of coverage, right? So option 3 is the full death and living benefit of a $500,000 and not taking the money back. You will get your full $500,000 death benefit for 15 more years. But if you outlive the total amount of 45 years, you have no more insurance. So that's something to think about. But at least you have the bells and whistles and you have a few options. Let's take a look at number 3. Number 3 is the Mercedes. And in our industry, we call this the GUL, Guaranteed Universal Life. Now, this protects you from age 35 to 100. You get 65 years of coverage. That's big. Same $500,000 death benefit, same living benefit, and it has a higher price tag, however. This is $200 a month, but you're going to get one bell and whistle. Let's take a look. 20 years into the plan and 25 years into the plan, if you decide you would like to cancel the plan, you will get a full refund of all that you paid in, but it can only happen on the 20th year or the 25th year. You can say to yourself, hey, I'm going to take all that money and I'm going to pay off my mortgage, or I'm going to take all that money and I'm going to reinvest it somewhere, or I'm going to keep making the payments because maybe at 75, I might need the living benefit so my kids won't have to be my personal nurse. You know, the choice is yours. So you have that one bell and whistle. At 20 year or at the 25th year, you can decide to get a full refund. Let's take a look at number 4. If your favorite car or your dream car was a Lamborghini, now I want you to replace the Lamborghini with whatever your dream car is. This is very important. Your dream car or dream truck goes here. And this in our industry is called a LIRP, a life insurance retirement plan. So let's take a look at this. In this situation, this is looked at as an asset, not an expense. So this life insurance retirement plan has a $500,000 of a death benefit and a living benefit. So think about this. You're 35 years old. This actually lasts to age 121. So on one side, you have the death benefit, living benefit to age 121. On the other side, this is the beauty. This is why it's called the LERP. You have compound accumulation. You have an interest rate that averages 6 to 8% over time. It's creditor safe in most states. We do not give tax and legal advice, so check and make sure that in your state it's creditor safe. It's also tax free as long as you follow the rules. And there's no market losses. This is where zero is your hero. So when the market is going down, this performs with any particular index that is offered by whatever companies that we represent. And let's say the market goes down, zero is your hero. You never go below zero. And some companies may give you a little bit above, maybe 0.25% or maybe even 1%. And guess what? It's not like your typical retirement plan where you got to wait to 59 and a half to actually access it. It's actually liquid before retirement. So maybe at 45 or 50, you want to tap into this to take some money to do whatever you like with it. And this is a great supplemental retirement income plan. But here's the difference. You're going to pay more for a Lamborghini, right? Remember, one side, death benefit to age 121 with a living benefit. On the other side, it's all those perks that you see there. And this may range, it's flexible. It may range from $300 to $700 a month. This is your choice. The more you put in, the more potential you'll have for more income later. I want you to imagine having a $500,000 in tax-free income or over $500,000 of tax-free income by the time you actually decide to retire. Now, the fifth type of insurance is what we call the private jet. And this is our reverse banking method. Now, there are a lot of companies that don't offer this. As a matter of fact, we're one of the few elite companies that deal with this method. And this is our OPM strategy, other people's money strategy. Now, for details of this is about leveraging a tier 1 asset using positive arbitrage to build massive wealth, not only to live off of, but actually be able to still leave millions to the next generation as a financial legacy. So wherever you're seeing this video, I want you to click on the link, go to my YouTube channel, and watch the power of leverage so you can learn more about this private jet that's going to put you and your family on a money and legacy trajectory that you've never seen before. Again, my name is Dre Parker, and make sure that if you are interested in learning more, just click the link on wherever you're seeing this and reach out to me. And if you're a financial professional and you would like to learn more and get elite training and also learn how to do our reverse banking method and offer that to your clients, reach out to the link and I'll be more than happy to have a 15-minute conversation with you to help you understand so you can learn more. I'll talk to you soon.